Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Handtech Markets. Each week I take you through the key events that I believe will be driving your investments in the coming days. Now, this Non-farm Payrolls report that we got on Friday massively changed expectations of a Fed rate hike again. The markets are going right the other way. They're sort of selling the dollar. The rate hike expectations have been pushed out into deep into second half of the year. Seemingly now June and July are off the table once again for the possibility of a hike. Now we've got Janet Yellen speaking on Monday evening UK time, and that'll be interesting to see what she says, because generally she seems to be the key one that sort of drives the absolute market expectations. So we'll see how we're sort of set up after that speech, but it'll be very interesting nonetheless, I think. Now markets have been certainly sort of significantly made more volatile on the back of this because the dollar's been flying around. There was a huge move against the dollar on Friday, a bit of a retracement move on Monday, but it'll be interesting to see as that settles down whether we're now going to start to see a more sort of controlled dollar weakness in the coming days and weeks ahead. Now this Brexit vote continues to be a big impact on sterling. Sterling is the biggest underperforming of the major currencies in the last few months, and certainly the Brexit uncertainty and fears over a Brexit are the main driver behind that. And we had a couple of polls out over the weekend, and those polls would suggest sort of leaning towards possibility of a Leave victory. But although I still look at the poll of polls, and those poll of polls continue to suggest that Remain is in the lead, although somewhat at a smaller level than previously. And throughout this week we've got a little bit of data, not too much. We've got China with some trade data and inflation, and maybe that will be a driver of risk appetite as well. So things to watch out for in the coming days. Now, Forex markets, well, we've seen this, as I said, the dollar weakness that's significantly impacted across the Forex majors. We've had euro dollar sharply rallying once again, leaving behind that big key pivot, the long-term pivot of $1.11, and that's sort of pushed up higher. And it could even now be that sort of as the dust settles, we could see a further push higher and a move back towards the long-term range highs. But at the moment, you've got the support band sort of 112.15 to 112.90 that maybe you should look out for a retracement, and nice little sort of buying into dips opportunity there. Cable, as I said, impacted by the Brexit vote, or the Brexit polls I should say, and that continues to be very choppy on a near to medium term basis. You get these sort of movements either way as the polling data comes out, sort of pointing to one victory or another, and certainly the sort of fears over Brexit continue to throw cable left, right and centre. So a really significant sort of volatility that we're seeing on cable at the moment. You've got the support that comes in 43.30 area, 43.50, the resistance around about 45.80 at the moment, but certainly I'd expect continued volatility there. In terms of dollar yen, big move lower on dollar yen with the yen strengthening, and that could well now see that the Bank of Japan has got a bit of a decision to make once again, because it was looking pretty okay with the rally coming in, but the Bank of Japan has always gone on about the speed of the sell-off on dollar yen, the speed of the yen strengthening. Certainly that move that we saw on Friday is not going to help them in that regard. So that maybe they've got a decision to make. You've got Japanese final GDP data this week that again could impact on the yen. In terms of your equity indices, well, you've seen sort of more of a move into sort of a rangy phase, really. Sort of the recent rallies that we saw last week rolling off the top, and sort of certainly the underperformance that we're seeing on the DAX is an interesting one, because the DAX tends to be more sort of globally growth orientated in terms of the indices. Now the FTSE is performing pretty well on Monday. Will that continue? The reason the FTSE is performing well is due to the dollar weakness. That is having an impact on the commodities and the big basic resources weighting in the FTSE 100 is sort of benefiting off the back of that. But in terms of the S&P 500, that remains pretty sound, actually, pretty solidly supported. But could it be rolling over as well? You've got the resistance at 2,105 to 2,111 that sort of holding it back at the moment. Now, your commodity prices, well, the gold price rallied sharply on the dollar weakness. That dollar weakness drove gold strongly higher on the expectation that the Fed would be at having to push back their interest rate hikes, that continues this sort of environment of negative real interest rates, and that is so supportive for gold. So gold price being bulled up on that. You've got also the oil price, which in the wake of the OPEC meeting last week, not a great deal happened. Again, there was a disappointment. No production limits were reached or an agreement, and certainly chugging along. Does OPEC do anything? Well, it certainly doesn't seem to be at the moment, but certainly the market is sort of consolidating as we sort of reach towards the summer season, and it'll be interesting to see what happens to supplies, which continue on the EIA oil inventories to just come up and throw in a few inventory drawdowns, which is supportive for the oil price. Now, throughout the rest of this week, well, as I said, we've got a little bit of US data, not too much. We've got the jolts, but focus probably mainly on the Chinese data, which is the trade balance, and also the inflation data. Also, you've got a little bit of UK manufacturing data, but not a great deal going on this week, really. Markets will certainly be focusing on Yellen, and they'll be reacting to that on Tuesday. And it'll be still sort of more towards the settling down following on from this non-farm payrolls report that was out on Friday. Now, we do also have a couple of monetary policy meetings from the RBA and the RBNZ. Possibility with the strengthening of the Kiwi that maybe the RBNZ have now got a decision to make as well, whether they will have to sort of cut rates again, but certainly no cuts are expected by either bank, but it'll be interesting to see what happens in the outlook statements as well. So I wish you good luck in your trading throughout this week, and I will speak to you again soon. Thank you very much. And don't forget, we've got on our website, we've got a section dedicated to the Brexit as well. We're going to be doing webinars on the 15th of June, and also we're writing research and posting it all on our website. So go to our website and take a look. Okay, thank you very much, and I'll speak to you next time.